and welcome to this month's edition of the ESSSuper Investment Update. During May, we saw consolidation of share market gains in a number of major markets. The Australian share market was up 3.1%, the US share market gained 1.7%, and Europe was also up 2.3%. The performance of key commodities played a role in the fortunes of global share markets. Oil rose 6.8%, boosting the shares of companies within the energy sector, while a fall in the iron ore hurt a number of miners, including Australia's BHP and Rio Tinto. The Reserve Bank of Australia reduced the official cash rate from 2% to 1.75%. This outcome took investors somewhat by surprise, and there was an immediate reaction with a jump in the Australian shares and a depreciation in the Australian dollar. The RBA is now forecasting a lower inflation outlook for an extended period and aiming to push inflation back within its targeted range of 2 to 3%. Markets are pricing in a reasonable prospect of at least one more interest rate cut from the RBA in 2016. The Australian dollar depreciated against the major currencies, including the US dollar, the euro, British pound, and Japanese yen, on the back of the RBA decision. During the month, the US economy continued to perform reasonably well. Low unemployment, positive business and consumer sentiment are raising the prospect of another interest rate rise in the coming months. Negative interest rates are designed to encourage borrowing and spending and discourage savings. While it remains early days, the impact of these policies appears limited, and it continues to highlight the fragility of the global economy and the need for global central banks to support their economies. There are a number of political events which have the potential to impact markets over the coming months, such as the Australian and US elections, and another worth mentioning is the United Kingdom's referendum on June 23, whether they remain in or exit from the Eurozone. As the chart shows, the polls indicate it is a reasonably tightly run race at the moment. However, financial markets are pricing in a greater probability of the UK remaining in the EU. Whatever the outcome, we expect some volatility in financial markets in late June around the time of the referendum. With strong performance from share markets over May, ESSSuper's more growth-orientated investment options generated solid positive returns. Stronger performers included the Australian equities portfolio up 4%, international equities up 3.5%, and the international corporate high yield debt portfolio which rose 2.9%. ESSSuper diversifies risk across and within asset classes to mitigate the likelihood of any one market or investment performance dominating the returns of the portfolio of the investment options over time. The long-term performance of the ESSSuper investment options remains in line with our expectations, and the 5-year results are above long-term expected returns. The default growth investment option has delivered 8.3% per annum over the past 5 years. It's important to remember that superannuation investing is primarily designed with a long-term time horizon in mind, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. ESSSuper will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon. Thank you.